Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right. Back here on the Investor Coaching Show, I'm Paul Winkler, talking money and investing. Let's see. Do I want to do this now? No, Nick? No, you don't think so? I don't know if I want to do this now either. I was like thinking, can I jump in back and forth? Can I find what I'm looking for fast enough? I don't know that I can do it. I don't know that I'm that talented.
I believe in you.
You believe in me?
I
do. Okay, so I may do the next segment. I may actually do a next segment because it's good, but I want to give it its due, and I want to make sure that I find the audio segment to make my point. Okay, so a lot of talk this week about Fed interference, Federal Reserve interference. Just an interesting little exchange between Chairman Powell and President Trump. That was super interesting. But, just the whole idea of the Federal Reserve is, what do they do? The interest rates, the short-term interest rates, people put a little bit too much, I think, credibility, clout with the Federal Reserve. The interest rates, actually, some interesting things have been happening with interest rates because of the stablecoin, and it's created some demand for treasuries. When you create more demand for treasuries, that can drive the price of treasuries up, and that drives interest rates down. So that has been something that's been going on. But there was some talk about attempted Fed interference. And the only reason I want to bring this to your attention is just because I did not know some of this. Because people act like this is all new. This whole idea of a president being a little bit upset and having fights and infights with the Secretary of the Treasury, the Federal Reserve, that has been, it's all a new thing. That this has never happened before. And apparently it has not been something that's all that new. And they were talking about that a little bit this week.
The truth is that to some degree, this is not new. You can go back 1965. You know the story. LBJ physically shoved Fed Chair William Martin against a wall at his Texas ranch as he was demanding that he lower interest rates.
Now, this is something I talked about last week or maybe the week before. I can't remember. But the point I was making was this. The reason I think that it is, when that people are so concerned about any kind of pressure on the Federal Reserve is because if a president wants to get reelected, I'm not saying that this president, or I'm not particularly pointing at anybody. Now, he actually points out a couple different precedents here in this. But the point is this. There is that possibility. If you take down that barrier, and let's say that the opposing party that you support is in power, and all of a sudden this barrier is gone, you could have pressure to reduce interest rates just before an election, which could give a boost to the economy. And then after the election occurs, let the interest rates do what they will, because who cares? The election isn't going to be for another 4 years. So this is the reason it's such a concern, is that if you have the political party in power putting pressure on the Federal Reserve, it could be misused. And there was one example right there.
And I wonder, when you start to think about that story, or you start to think about the story that Paul Volcker used to tell about when he was brought into the Oval Office with Ronald Reagan.
Now, Paul Volcker was in charge when Carter was in there. And one of the things that Carter did is he brought Volcker in, and Volcker said, he's going to raise interest rates. And that was literally going to be the nail in the coffin for Carter's presidency, because if you go and raise interest rates and all of a sudden you go into an election and the economy slowed down, you're in trouble. But they had to. And the reason they had to is because you had stagflation. You had inflation with a stagnant economy, and nobody knew what the heck to do with it. You had to slow the economy down even further to get rid of the inflation. You had to get rid of the expectation that prices were going to continue to go up. And that's why that actually happened.
How we should think about the very concept of the Fed as an independent entity?
Well, you're absolutely right. There have been episodes in the past that we know about now where presidents have attempted to pressure Fed chairs. We've seen what happens when that occurs. And probably the most prominent example would be Richard Nixon exhorting Arthur Burns to hold interest rates down before the 1972 election. And what that ushered in the United States was a period of stagflation, weak growth, high unemployment, high inflation. And it really took Paul Volcker to come in, and it cost us a very deep recession to re-anchor inflationary expectations to get them down. So this kind of pressure, which has sometimes existed, but certainly not, in my experience, not during the Clinton administration or any subsequent administration that I'm aware of, we see that the consequences are very poor for the economy. We end up with higher inflation, worse economic.
And I think there's the point, I'll stop it right there. But I think the point that you just got to get is that's why it is of concern. If we have some kind of control like that is taken away and it's put in political power, it could be, you look at this particular administration, you go, I think that, they're going to use it responsibly. That's why they're concerned about it. Now, as far as the interest rates, now here's the thing that I think is, because you look at it, and I hearken back to what Gene Fama, University of Chicago Nobel Prize winning economist, says. He says, I look at it and he says, the reality of it, interest rates are actually controlled by the markets more than anything else. Because remember, what has been happening is this whole idea, we got to reduce interest rates, and people are worried that interest rates are going to go up and it was going to be inflationary, and inflation moves with interest rates. But the reality has been the demand for treasuries and a lot of the things happening has actually had a downward pressure on interest rates. And it's how much of the interest rate is actually set by the Federal Reserve. It's really just short-term stuff. And this is where it really gets it gets a little bit weird, because people think, oh my gosh, this is terrible, this whole fight that's going on. And that's why there's so much tension that's really happening there. On another topic, Japan, trade. We had a trade deal, right, this week. And one of the things that was talked about is how this could actually play out in the economy. And I think it's interesting because we're looking at the people in our economy and saying, how many people do we have to actually produce the things that need to be produced? That was the topic of conversation.
This worked out.
With Japan, the trade deal.
Now, Europe's going to be under a lot of pressure. But I do think that this was the big one in terms of like the huge car companies that you just did not want to see gutted. I mean, look, yesterday GM got hurt. I thought GM quarter was pretty, GM's numbers weren't bad. Now GM goes up. I mean, there are situations where everybody could win. I just don't know where we're going to get all these people. Another $500 billion. $500 billion seems to be the operative term of what you're supposed to invest here. We're going to get a lot of robots because holy cow.
And that's it.
People.
That's really it right there.
That's a high-quality problem, but we don't.
Right.
So that's the concern, is are we going to have enough people to do this thing? I think what's going to happen is you're going to get a lot of automation because we don't have the people. And this is something I remember Matt Murphy and Chris Hand and Dan Manis, we were all talking one day. We were all at an outing. And that was the point that I brought up to them. They said, well, we could bring all this stuff back here. And I go, yeah, we've got to make sure we got the people, or it's going to be automation that actually. So it's interesting that's being talked about right now. The other thing that's happening, I think, is really interesting that I've talked about on the show before is nuclear plants. I've been talking, you've heard me talk a little bit about modular if you listen and follow the show. I think this is really interesting because one of the things that has helped earnings of companies significantly, because people get really pessimistic. Somebody actually, when I was on Channel 5, they said, when's the bubble going to burst? And I said, who says the bubble is going to burst? Who says it is? The prices of stocks right now, they're really in line with historical norms, but you also have potential for growth in earnings, which is significant. And for you sitting around, those of you sitting around going, this is a bubble, it's going to burst, everything's going to come crumbling down. You don't know that. Why? Because a lot of things that are happening out there right now to reduce expenses and cost of doing business. It's amazing, some of the things that are happening. And nuclear plants is one of them.
But there's
Correct.
good news. There's good news. The TVA, they're building a new nuke plant. The NRC,
Tennessee Valley
is on the clock.
Authority?
Yes, Tennessee Valley Authority.
Okay.
Yeah, I know.
We made the
Back
news.
To
Yeah,
FDR.
Roosevelt, yeah.
The NRC is on the clock, 18 months to be able to approve the plan. Once the plan is approved, bingo, it starts to be built. It's going to be built. Canada is being built. Scandinavia, they're building nuclear. So the hope is nuclear power.
That's it.
That's a big turn,
Yes.
given where we've been the last few
Really is.
decades.
That's the hope.
Yeah, and that's something. And this is something I've been talking about a lot is, you could have this situation where we start to look at other ways of getting energy. And it's indeed what is happening, which is pretty exciting. Now, I'm still holding out for flying cars, but, we'll get there. We'll get there. Though then we had the reduction, some of the issues going on with electric cars, and that has been an interesting little topic of conversation. With the new big beautiful bill, that was actually something that was in there. But anyway, so I think there are a lot of reasons to not look at this and say, oh, we're in a huge bubble. But here's the deal. Markets go up 3 out of 4 years. They go down 1 out of every 4 years. And if you just get it in your head that even under the current administration, things could be going wonderful and markets could still go down, but don't worry about it. Don't get concerned about it. You could have a situation like I was talking about earlier in the hour where the opposing party gets into power and stock markets still go up 3 out of 4 years on average with the opposing party to yours. And that's either side, wherever you are, in power, and markets still go up. It is a fool's game to try to figure out what's going to happen and to worry about what's going to happen based on who is in power in Washington. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.